Hi, this is Randy Finney with Right Side of the Chart, and today is Tuesday, August 24th, 2021. It's after hours as I'm starting the video. It's about quarter till 6. I've been at my desk all day just really hunting for trade ideas, actionable stuff. As I've been talking about for many months now, the stock market is just kind of in a very low volatility phase, grinding sideways to slightly higher without any sell signals. And because of that, you're not seeing, because of the lack of volatility, we're not coming off a correction. You're just not seeing many sectors break out. Everything's kind of just, reverted to that low volatility grind. Here and there things pop on earnings and stuff like that, but other than that, there's just not a lot of opportunities on the long side. And of course, when you have the market steadily holding up, even if it's just going sideways, you're not seeing a lot of attractive short ups. So, as you know, my focus has largely been on commodities and other things, non-equity assets lately, bonds here and there, gold, mining stocks, gold futures, all different types of commodities, crude oil, grains, things like that. But with that being said, as of today's video, I told you that my top pick for today was the mining sector, and that is because going long, I like to make a case to go long on one or two instances, typically, either in a pullback to support, and that's what we have here. We have a pullback to support. This is very good support on GDX, 31.33, give or take, and that's the last time we hit it there, and we tested it again, and there we are. So again, I like to either go long on a pullback to support if I think that support level will hold and is likely to produce a reversal or a bounce, or on a breakout above a resistance or a bullish chart pattern. This is not the best defined trend line. There's only a few reactions, but let's just say we get another reaction there, and then we go on to breakout, or even if we break it out, there's a little gap right there as well. So there's some resistance. So in other words, this would be an objective long entry, and if we bounce and this trade doesn't get stopped out, the next objective long entry is break above the trend line in 34.50. So that one's a break above resistance, that's a pullback to support, and when you get a pullback to support, when a security's falling to support, sometimes I'm looking to short that on a break of support. But in this case, with all the other things I've mentioned, we're oversold down here, oversold in a primary bull market. Back here, that's where I got bearish and mentioned, looking for a correction based more so on the charts of gold, silver, the US dollar, and the euro, what was going on there at the time. And so I still maintain and view this to be an expected correction within an ongoing bull market in the miners and gold. And it's really not any longer or less than any other one in the past. I don't want to really digress here and go back too much into, but when you look at gold, here's a correction. Well, this one lasted, look, from the beginning of 2008 all the way until about the end of the year, about late 2008, so almost a year, and gold corrected about 31%. This one right here has been so far, well, that's where gold bottomed right there, and that was only 7 months and about 20%. And so if we're still in that correction mode, even if there's more downside, we're only about, right about 1 year into that correction, which again is right on on par with previous bull market corrections when you get a pretty big one within there. Again, time will tell if that's proves to be the case or not. But right now, I don't see, when a case was made for a strong case for a bottom here in the beginning of a bull market, and nobody can argue that gold has been in a bull market or was in one, at least from that point. Again, only in hindsight will you say, was this the end of the bull market and begin a new bear? Hindsight will tell us when we start to take out a lot of these previous lows and we have the makings of a solid bear market. All right, let's get back to on task here, and we're going to talk about, since I've already covered gold ad nauseum lately, just GDX and the miners. I'm going to get to my top picks, which are the silver miners. I have a special place in my heart for trading when the miners are bullish. And again, we're going to need a little more evidence. Right now, we're just falling back to support. There's not a strong breakout or anything. But if we do start to move up, I'm going to show you some of the individual miners that I think should outperform. And I also do that for two reasons, other than individual trade ideas, which I've always said this. If you're bullish on gold or the mining stocks, and you share the same outlook I do, you can do one of two things. You can keep it very simple and just buy gold via the ETFs or future, buy silver, buy these ETFs like GDX, GDXJ, which is a juniors, SIL, the silver miners ETF, and then you're diversified. It's a shotgun approach, and there's some benefits to that. Obviously, it's simple, and a lot easier to manage. Or you can sniff out and try to hold a portfolio, a little mini portfolio, half dozen at least, ideally, maybe 10, 12 of the most bullish miners within the gold mining and silver mining arena, and more often than not, you will outperform by a pretty good margin the entire group. Okay, so there's the case for GDX, and before we move on, I want to show you what we're going to be looking at here is the Forex as well, currencies. Gold trades inversely to the US dollar. It means when one goes up, the other goes down. If you've followed me for a while, you've heard me say this many, many times. It's simple. Gold, at least the gold we're trading, whether it's the ETFs like GLD or futures, and a lot of places, or even other countries around the world, gold's priced in US dollars. So it's very simple. If the dollar is falling, the dollar drops, it takes more dollars to buy an ounce of gold, therefore the price is going to go up. If the dollar is rallying and increases in value or increases against other currencies, it's going to take fewer dollars to buy a share of gold. So that's why you have that correlation. And then the dollar and the euro move inversely one another because the euro is the biggest component of the dollar index, about 57.6%, I believe. So here's a chart. I'll just show you just to make sure you don't take my word for it. Let me turn off this one. Here's the white line is GDX, and I'm going to put on gold. So there, just so there's no mistake about the extremely tight correlation. Remember, they're not priced on the same scale, so don't go off. Let me make sure I don't have them all starting at the same point. Yeah, they're not priced at the same scale, so you're going to see some differential between these two lines. But what you want to focus on in looking at correlations between two securities is when one's going up, is the other going up? When one peaks, does the other peak? And that is most certainly the case. So that's not debatable. Gold and GDX have a almost 1-to-1, or a very not ratio-wise, but a direction-wise positive correlation. We'll turn that off now that that's clear, and show you that the same thing holds true with the euro. This is the euro-US dollar pair. Here, we'll make it easy. We'll do FXE. Okay, FXE is the Euro ETN, and so now what you're looking at, same thing. This is a chart going back. This is the end of 2015 right here, the beginning of 2016, and again, they're priced. The scaling is different. Remember, currencies trade in pips. What's a pip? A pip is 1/100th of 1%. It's a tiny fraction, and that's because currencies move in such relatively small amounts. So a pip is the smallest move a currency can make, and that you take it out to the fourth decimal. This is a pip right here, the fourth decimal. That's 1. If it goes up a pip, then it's 0.002. And so GDX is the opposite. That thing flies up and down in a day. It's not unusual to see it climb 5 or move up or down 5 or even 10% in a day due to the volatile nature. So again, when you're looking at correlations, don't pay attention to the differential in price. Look at the trend. Are they both trending in the same direction? And do they both peak around the same time? And you'll see that is the case. There's a bottom, there's a rally, and you can see it again. You can replicate this chart on your own. So basically they're all moving down, up and down. There are periods where they can kind of go the other way. Unlike gold and GDX, there's a not as tight, but still a very, very tight correlation. So all we have to do really to nail the trade on gold is to get the call on the currencies right. And you can of course look at the US dollar. I like to flip the dollar upside down by doing UDN, and actually we'd have to do UDN GDX like this. GDX in white, change this, compare it, and make that UDN, which is the inverse dollar ETN, gives you an upside down dollar, and then you can also see that correlation there. Okay, so that's that. Now what do? We look at the euro US dollar. And this is a daily chart, and right now we have that's downtrend line. It's pretty clean, and there's your divergence line. So this is your positive divergence right there, and this divergence line and that upper line forms a bullish falling wedge. We had a smaller line there, downtrend line, which was taken out. We popped, ran up, and we put in this marginal new low. And this is all the analysis I've been posting lately. Same thing here on a smaller scale. We zoom down to the 60-minute chart at E7, those Euro futures. That's that same pattern. So that's that same wedge I've been highlighting on the Euro futures. And there it is on the daily chart. So boom, we popped that, which by the way, we're also at support. See this 117, 115 level? That's pretty darn good support. You go back and look at all these reactions going back into last year. Lots of reactions. We dipped down below there briefly, very briefly twice, and we fell to this next support. And that's a possibility. So I can tell you right now, if we don't break above this trend line, or even if we do and we take another jog down, I'll be talking about support right there as well at 116.045. However, when I look closely, you know, there was this was the last major reaction low. There were quite a few back there, and what happened back here when we broke it? Remember, we had a little brief move down, and we shot up. We broke it there, and look at the powerful rally that ensued. So we did have a little breakdown recently, but look, we regained it, and that may be a bear trap right there, or whipsaw false signal. And so we get this. All I want to say, and that's what I think we get. That's going to be bullish for the dollar, and I think that because of a lot of confirming signs such as a positive divergence. You know, back here when last time we tagged it, we still had a nice rally, but we didn't even have positive divergence there. We were oversold, but we made lower lows on the indicators, and this time we have positive divergence. So there's a case for the rally in the euro. Long term, I've covered this many times. Euro US dollar broke out over this long-term downtrend line. In doing so, right after it did it, we had a bearish rising wedge, and the wedge broke down. So there was a correction likely, and we did. We back tested the trend line. We're close to back testing again. So, all right. So that's it. I just want to make clear that that's the bullish case for the euro. And should we break out and take out these levels, and that's going to be quite bullish for gold. So now let's get into the individual miners for you. Let me do it this way. I'm going to do it backwards a little bit since some of you might not want to listen to a 20-30 minute video. I'm just going to start out with the silver miners, some of my favorites here. There's not many, and that's why I'll cover those. So in no particular order, let's see, is this my list here? Yeah, this is good enough. This is one list I have. Okay, not one of my favorites. I'm just going through these in no particular order, but the buyers are starting to step in here. What do I see on this one? This is GPL, Great Panther Mining. I do see overbought conditions, oversold, I'm sorry, and extreme oversold. The last time we were that oversold was right back here, and this stock. Again, don't underestimate these silver miners. Boy, they can run when they want to run. That was a 370% rally. So they make the stock indexes look like chump change when they want to run, and it cuts both ways too. You know, this last correction off the high was a drop of about 64%. So, not for the faint of heart. But the way to trade these is you just don't put very large positions. And again, I like to take a shotgun approach, spread it around, sprinkle around. You never know which one's going to be the big winners or the big winner or winners. ASM. Now you're going to see a common theme here, and you're going to see this when I get to the gold mining stocks as well. Remember, these are the primarily silver miners. Positive divergence here on the daily time frame. Oversold as well. Right there, we're coming off oversold readings. The last time we were there, almost there, that was a full oversold reading, and there is a downtrend line to watch if it breaks out. And there's potential targets, 113 and 147. FSM, Fortuna Silver Mines, nice. Again, you have these downtrend lines forming and positive divergence. And again, first time we've had positive divergence in a long time on these, on both indicators, the RSI and the PPO. Next up is EXK, Endeavor Silver, positive divergence right there. Remember, we had on this one recently in a lot of these negative divergence to the high, we broke down, and since that breakdown, we've had a healthy correction. And but bigger picture, when you turn off all the lines, this one at least from 2020, this is in a bull trend right here. It's been moving up. Where does it start to come into question? When we take out, these are big major reaction low right there. As long as we can turn back up and do this, that's bullish. AG, this one's a nice setup, one of my favorites too on the silvers. First Majestic Silver Corp, just a nice little wedge pattern there. There is your bullish falling wedge. There's your positive divergence, everything I like to see. I will note that on a lot of these I have, if they don't take off now or if they have a little false breakout, go down, as long as they can keep that divergence intact, there are quite a few of them have support just below. Just as, it's all relative, whether it's 5, 10, 15%. This one happens to be right now about almost 14.5% below current levels. But, I'd rather be early than late on these, because if they start ripping, they can really get away from you. And there's, I don't even have all the targets marked. Again, I'm looking for a possible re-entry, and I have been for a while, on long-term trades, trades that are going to go on and potentially take out the previous highs. So you can look at some near-term targets if that's all you want to do until you have more confidence in the longer-term outlook for gold and silver. Or you can just get in if you get a good entry, maybe start scaling in and down to and not much below that 1094 with a stop somewhat below, and just let it ride. SLVP, this is a ETF, actually, Global Silver Miners ETF. And I don't have it marked up, but I can tell you right there, nice, clean, positive divergence. So there's a one-size-fits-all. Again, the ETFs have the benefit of, you buy one ETF and it will hold for you a dozen or more individual stocks. You don't worry about earnings or any one company going kaput while the rest take off. That's the benefit of an ETF, just like a mutual fund. And this one, some work to be done. It's been grinding around, consolidating for many months. And again, that's indicative of bull market action. I always talk about how securities correct in one of two ways, or a combination thereof. They can correct in price, like when it broke this trend line here, could have had a strong price correction, or you can correct in time, and that's what it did here. So this was more of a correction in time. Now the fact it fell down through there, is that good? No, not because we broke a multi-month trading range. However, see that little divergence right there? So this is what I'm looking at. And that's why I can't say with the highest degree of confidence go heavy right now in these miners. But what I think may happen here, this may prove to be what we call a bear trap, aka whipsaw, false breakdown. And when will we know if it is? Well, if we regain that bottom of that level range, about 1436. So if we can pop this bullish wedge, get into that range, then all those that shorted the breakdown will realize they were wrong and start to cover. They have the shorts have their stops probably all up in here, just above the bottom of the range and throughout. And the more we go up, they get squeezed. So if you can do that, get that recover, get in that range, especially then go and break above the top of the range, uber bullish. Let me put another line on the top of the range, because we had a few spikes above. That's really the top of the range, about 1860 or so. Next up, SIL. Another one. This is, again, another silver miners ETF. I believe this one's more concentrated in the U.S. It probably has some Canadian companies as well. I'm not sure. Like I said, the last one was more of a global miners. And this one is really just a hair below the bottom of the range, but not too far. So enough to say it's still in fact, it's back within the range. If you want to look at it that way, we snap right back in there. So there it is. This is what you want to look for. And look, at minimum, maybe a swing back up to the top of the range there. And even that would be a move of, if we're just going to the top of the range, about 29.5, 30% right there. A few more. There's silver, the sector. There's PAAS, Pan American Silver. Here's another one that can really run. I've traded this one for many years. Positive divergence on both indicators. A little trend line there. Some rough targets. I'll have to. I'm doing it now. I'm updating that. That would be your first target there, about 29.24. And then the top of the range really comes in now about some of these lines I've had on this chart for a while. about 40.29. MAG silver. There it is, your divergence, your little wedge type pattern. Maybe we work our way down. Um, and if not, look, we're right at the downtrend line. So you don't buy right at resistance. You either wait for a breakout above it or wait for a pullback. And if I'm early on this and these guys are in a bull market, but they have more downside to come before they break out and continue on to new highs, then here's a very good support level on MAG. It's what is that? 1392 right there. Lots of big reactions on that recently, and it was resistance back here. Gosh, going all the way back for a while. It was resistance before we broke out. So there's another one I like. SVM, divergence on the RSI. Not one of my favorite. I also don't have much support below, but again, you never know which ones will take off. They tend to move together. WPM, wheat and precious metals, a positive divergence. And then this one, USAS. And what I'm noting on, and I might not have pointed it out on some of those, a lot of these stocks, it's their first oversold or deeply oversold reading. You can see these here, here, and here. These are the only times we've gone this low on the RSI. So, it's kind of a wash, rinse, repeat thing. There's no guarantees. Oversold in itself isn't a buy signal, but it's conditions. It says, hey, this stock is about as oversold as it gets, and if you stepped in back then after that oversold reading, even if you got in early, I'm going to play the game that you said you got in a little early when we started to become oversold, not at the very bottom, and you held it, you gave it some room like you need to do, you were good for about 200% on that one. If you bought this one, I just happened to grab the low there, you were good for about 285%. So I see no reason why we can't snap back up here to at least that 245 level. That's 150% return. How do you trade that stock? Well, if you're shooting for 150% minimum, you can use a 15% stop loss, and that's a 10-to-1 risk. That's a phenomenal risk-reward ratio. You can use an even larger, stop loss and still be within a 5-to-1 or better risk-reward ratio. Okay, so that gets the silver miners out of the way, and we'll just now look at some of the gold miners. This is GDX. I'm just going to go through the top holdings in order of market cap. So your largest one here is Newmont. Don't need to hit on each and every one, but I'd like to go over some of these. And what I'm seeing is a common theme: positive divergence here on the daily chart. When you're in a bull market and you've been in a correction phase for a while, and again, this is a sideways correction, if nothing else. And there's roll back, and this one bottom, like that's all I can go back on this chart. I can't roll any farther on a daily time frame on this program. But gold bottom back in late 2015. So did a lot of these miners. This is a top dog in the sector. This is a bull market. There's a bull trend, and here was a sideways consolidation, lasted for over a year, and then finally we had an upside resolution and it had another leg up, and again we're in a little consolidation phase, and constructive chart. We have the divergence right there, just like we had, and that was our warning back here. Negative divergence at that high. Said, all right, guys, time to take some profits, tighten stops. And then maybe recycle back in on a pullback. So there's Newmont. When you go, if you happen to be using TC2000 or even, I don't know, freestockcharts.com, which is from the same company, will give you these. When you enter a symbol of an ETF, it'll give you a list of the holdings. They've been wrong on this one forever. They include TXG, which is 10x Genomics. The stock you're supposed to be looking at, I pulled the holdings of it, is TXGTO, trades on the Toronto Exchange. On TC2000, if you have a .TO, that's trading a stock on the Toronto Exchange. Same story here, positive divergence right there, really off this point right here. And not a super well-defined downtrend line, but that's the story of it. And look, here's another one that there's some decent support a little bit lower if it happens to drift down. So I see maybe another 15% downside in the miners, but in the bull market, you might get that if you hold off and drop to that level, but sometimes you never pull back to those next support levels. And so I'd rather get these out now, and we'll keep an eye on it. So now I have to go back, reload GDX to get my list of holdings. Next one up, AEM. All right, so you're getting the pattern here. A lot of a lot of similar looking charts, positive divergence at support, and some trend lines overhead to watch to see if they break out. WPM, wheat, precious metals. Yes, I've covered some of these. May have already covered on the silver list. RGLD, that's Royal Gold, positive divergence right there. Not super crazy, but again, some of these charts, in a corrective phase, they get kind of sloppy, the price action. So, like I said, I don't have screaming buys on these right now. Just something that I think's interested. Some charts that look interesting, and I'm a big proponent of spreading around. Don't put all your eggs in one basket. Diversify. And I'm speaking to both long-term investors here as well as active traders. Active traders can get in here, we'll zero down, get into 60-minute charts, look, see if you have the divergence there. Maybe you can pick up a better trend line, not that that is a good one there, and that might help hone in on the entries. Next up, PAAS. That's that silver stock right there. I think I already covered it. Divergence right there as well. AU. And down the line. So I can keep doing this all day long. Those that don't have the divergence, like this one, this is BVN, Compañía de Minas Buena, and that one has a oversold reading, very deep oversold reading on the RSI. Last time it was that oversold was there, and then there, right there. So, not one of my favorite, but look, they're stepping in. They're starting to step in and buy. I'm seeing some volume come into these guys lately. And this, by the way, I might have circled it on some of these I might get to in a second. This looks indicative of a selling climax, just like this was, that big drop off into there. And then we're starting to see the buyers step in. So that selling climax is pretty much when the last of the weak-handed longs wash out, and then you get to have a stronger core of holders in the stock that are less likely to sell. KGC, nice divergence, and that's it. So I can do this all day long. Hecla, yeah, they put in a divergent high right here just recently and then broke this trend line, and we're below it now. So not one of my favorites. Again, it tends to move with the herd, but I just wanted to point that out. It's, if it continues to fall, it might be interesting down here at 462, and if it takes off, there's a potential downtrend line there. Probably new highs, especially if it can regain that trend line in that $7 level. That $7 level is pretty important support. We had a little breakout here, but it couldn't hold and it fell back down below it. So that's not so good longer term. So again, not one of my favorite. BTG, B2 Gold, nice. Look at that little wedge right there. Downtrend line, positive divergence, boom, boom. You had something similar here. There you had a wedge right there, and if you took the breakout on it, it was good for 14%. And here's another wedge, and this one could be better than that. GFI, pretty nice support. Look at this. That was resistance back here. Support, 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 support. So you can buy it on around that 863 level. I don't know if you're going to get another shot at it with a stop somewhat below, because these are volatile stocks. You gotta give them a little room. Sometimes they have these little flush out moves, the little dips down, stop clearing moves down below support. So on this one, minimum target would be that 1050-ish level there. Had a line here that will still hold 1173. Then those reaction highs. So if you're targeting that, you can have a stop down here and still have a very nice risk reward profile on that trade. AUY, same thing. So that's it. So that's why I like to go through all these charts. You can see common themes. A lot of the big names have these support and or downtrend lines and or positive divergence, like this one had right here recently at the lows right there. And yeah, I think that's about it. I didn't mark all these charts up. I'm just going to click through these so you can see a few. AGI, CDE. Yeah, CDE is a runner too. This one's saying gold, but I believe this one has a good deal of silver mining exposure, and pretty steep divergences right there. And this is another stock. When it wants to run, it can really run. The trends on this one are powerful. PVG, EQX. Look at that divergent low right there. Again, had a divergent low here. Didn't prove to be the bottom, but it was still good for about a 22% rally, counter trend bounce. All right, let's wrap it up here, right at the 30-minute mark. I'll get these trade ideas out to you, and I'll continue to monitor the sector, and of course, most importantly, gold and silver. And we'll keep an eye on these charts. If gold can push on, power up on through here, get above that former T2 target, and this is gold futures that was hit here, I think then it's going to run. So, and then those miners should, and they tend to outperform. Last thing I'll say, I'll end this. I've said this hundreds of times over the years. The gold and silver mining stocks are simply a leveraged play on gold, meaning if gold goes up X, they're going to go up X times whatever factor. It's not a hard number, but when gold rallies 20, 30%, they tend to go up 40, 50, 60% or more. And so, again, it's all comes back to getting the call on gold and silver right. And so we'll continue to keep a close eye on this. And, and if they don't pan out now, then I'll revisit these next time they set up, whether it's bullish or bearish. And this has been Randy Finney with Right Side of the Chart. Have a great evening.